July 8th, 2026. South Korea's stock market fell so fast that trading stopped automatically for the second time this year. $700 billion evaporated across Asian markets before lunch. And the strange part isn't that it happened. It's that it already happened once before, 6 days ago, and everyone acted shocked anyway. This is the story of a market that keeps breaking in the exact same place, and a company at the center of it that, in 2 days, is about to do the single largest stock listing of its kind in recorded history. If the market can't survive the small tremors, what happens when it has to survive that? It's happening again. It can't be happening again. Look at the board. 9 a.m. Seoul. The opening bell rings, and within minutes, the board is a wall of red. Phones start ringing before the coffee's even cold. Someone in the back of the room laughs. The wrong kind of laugh. The kind that comes out when there's nothing left to do but watch. This is what panic actually looks like on a trading floor. Not screaming, silence mostly. 40 people watching the same number fall, doing math in their heads they really didn't want to be doing this morning. By the time the automatic circuit breaker kicked in and froze the whole market for 20 minutes, the benchmark index had already dropped nearly 9%. 20 minutes is a strange amount of silence when your life savings are on the other side of it. Seoul, South Korea. Before any of this started. Here's a fact that should terrify anyone who owns Korean stocks. 2 companies, Samsung Electronics and SK Hynix, make up roughly half the value of the entire KOSPI index. Not half of tech stocks, half of the whole market. Airlines, banks, retailers, shipbuilders, all of it, combined, roughly equals 2 chip makers. Think of it like a boat. A healthy stock market is a boat with 100 oars, all rowing at slightly different speeds. Korea's boat has 2 oars, very big oars. And when both of them break at the same time, nobody else on that boat is rowing hard enough to keep it moving. So why does a mid-sized democracy let its financial fate ride on 2 factories that make memory chips? Because for the last few years, those chips have been the single hottest trade on Earth. Every AI company on the planet needs them to train and run its models, and Samsung and SK Hynix make an enormous share of the world's supply. Foreign money piled in. Korean chip stocks hit record highs. SK Hynix even overtook Samsung as the single most valuable company on the entire exchange. For a while, betting on Korea was just a cheaper way to bet on AI. Here's the part that should have worried everyone. A bet that concentrated isn't an investment. It's a single point of failure, wearing a suit. Here's how a stock bubble actually forms. 3 things. First, a real trend. AI demand for memory chips is genuinely enormous. This part isn't fake. Second, the trend gets priced in twice. Once, for what the company will actually earn, and again for what investors hope it earns in a future that hasn't happened yet. Third, everyone knows it's a little bit of a bubble and buys in anyway. Nobody wants to be the one who sold too early. It's a Ponzi scheme that doesn't need a con man. Nobody's lying to anybody. The lie is collective, optional, and everyone signs up for it anyway. How long can this chip boom last? As long as nobody asks that question out loud. Somebody asked it out loud, overnight on Wall Street. Semiconductor stocks got hammered on Wall Street. The sector's main index fell over 5% in a single session. Nobody found a scandal. Investors just quietly decided the AI trade had gotten ahead of itself and started selling before everyone else could. By the time markets opened in Seoul, that selling wave had crossed an ocean. Samsung and SK Hynix both tumbled at the open. Samsung down over 7%. SK Hynix down more than 9%. Remember the boat with 2 oars? Both oars cracked on the same morning. The whole index fell 8%. Circuit breakers froze the market. Think of a circuit breaker like a fire alarm that also locks the exits. It doesn't put out the fire. just stops everyone from trampling each other on the way out. The very next session, the market ripped back up more than 5%. Samsung and SK Hynix both rallied over 8%. Headlines called it a recovery. Traders breathed out. Except a recovery that violent isn't actually calm. It's the same instability, just pointed upward for a day. Korea's own volatility index, the number that measures how hard the market is shaking, hit a record high. Not calm after a storm. The eye of one. Underneath the relief, something else was quietly making the swings worse. Leveraged funds, investment products that multiply Samsung and SK Hynix's daily moves up or down, had pulled in over 200 trillion won. Every time the underlying stocks moved, these funds had to trade even harder to keep up, amplifying the exact swing they were supposed to profit from. Think of it like strapping a megaphone to a smoke alarm. The moment it goes off, it doesn't just warn you, it deafens the whole building. This brings us back to this morning. The trigger this time wasn't Korea at all. Broadcom, a major American chipmaker, gave investors a forecast that fell short of expectations. The main U.S. semiconductor index had its steepest one-day drop since March of 2020. Layer a second factor on top. Tensions in the Middle East, already elevated from an ongoing war there, spooked investors further, pushing money out of anything that looked remotely risky. Two separate fires in two different parts of the world, both landing on the same two Korean ores in the same morning. The result, the KOSPI fell as much as 8.8%, wiping the index down to levels last seen weeks ago. Korea's exchange triggered a level 1 circuit breaker for the second time this year. Not a new problem. The same problem, happening again on a schedule nobody controls. Here's the part most coverage skips. A stock market and a currency are connected by a pipe most people never think about. When foreign investors buy Korean stocks, they first convert dollars into won. When they sell and leave, they convert that one straight back into dollars on the way out. 8 straight days of foreign investors dumping Korean stocks after the first crack didn't just hurt the stock market. It hurt the currency alongside it. The won fell to its weakest level since 2008, the last time this economy was genuinely on its knees, trading past 1,550 to the dollar. The exchange even opened a 24-hour trading window, an admission the panic wasn't going to wait for business hours. There's a second, smaller weight on the currency too. Korea imports almost all its energy, and a huge share of that oil sails through the Strait of Hormuz. Under strain since the war nearby began, a weaker won makes every barrel more expensive. Not the reason the stock market cracked, but a second cut on a currency that was already bleeding. One day after the first crack, Seoul announced $9.7 billion in emergency financing, not for banks, for the small and mid-sized businesses squeezed from both sides at once. Sir, the currency's in freefall and the market just triggered a circuit breaker. What do we do? Announce a rescue package and pray the next earnings report doesn't rhyme with this one. It didn't rhyme. It repeated. A sitting Korean lawmaker looked at all of this. The leveraged funds, the record volatility, the wild one-day swings, and didn't mince words. He called the whole setup a casino. Some of those leveraged products had lost investors nearly 36% of their value in a single month. He called it a complete policy failure and demanded regulators delist them. To be fair, nobody forced anyone to buy a leveraged fund that amplifies a chip stock's mood swings. But when 212 trillion won of ordinary savings is riding on instruments built to make volatility worse on purpose, calling it a casino isn't an insult. It's a description. In 2 days, on July 10th, SK Hynix is set to list its shares on the NASDAQ. Not a small listing. $29.4 billion, which would make it the largest stock offering of its kind ever recorded, bigger than Alibaba's Wall Street debut over a decade ago. Think about the timing. The same company that just helped snap 2 circuit breakers in 6 days is about to ask the world's most scrutinized stock exchange to absorb its single biggest debut in history. Not cool? In the middle of the most volatile stretch this market has had all year. Nobody knows yet whether Wall Street shows up calm or whether it shows up already flinching. That part hasn't happened. We're not going to pretend we know how it ends. Korea isn't special here. It's just the clearest example right now. Taiwan's entire market runs on a single chip maker. A meaningful slice of America's own stock market gains lately have come from a handful of AI-linked names, not the other few thousand companies listed alongside them. To be fair, none of this means the AI boom is fake or that memory chips stop mattering tomorrow. The demand is real. The pattern isn't AI is a lie, it's this. When a handful of companies get priced for a perfect future, the correction doesn't stay contained to a stock ticker. It leaks into currencies, into government budgets, into a small business that's never sold a single chip in its life. Nobody planned for 2 Korean chip makers to functionally set the mood of an entire economy. It just happened, one record quarter at a time, until the boat only had 2 oars left. And both of them have now cracked twice in the same week. A casino. That's what one of their own lawmakers called it. He wasn't talking about a building in Macau. He was talking about the exchange his own country's retirement savings sit on. Nobody's forced to believe a bubble. Everyone just quietly agrees to.